This one single candle can make you money, and in today's video, I'm going to teach you how to find it. It is called a hammer candle, and it is the first price action signal of a reversal in the market. It is considered a reversal setup because of this long lower wick. This indicates that a dip was bought up throughout the day, which dictates that there is heavy buying pressure going on in the ticker during the duration of this candle. You can actually see a similar setup in the candle before it, as well as here, here, and here. You'll notice all the points that I have just drawn an arrow. The stock moves up pretty largely quickly afterwards. Now, this theory works in the opposite direction as well. I want you to take a look at this candle here. Much like the reason for bullish reversal being the long lower wick, the reason for bearish reversal here is the long upper wick. This is referred to as a shooting star candle, and later in this video, we will also build a scanner to locate these setups. But for now, let's focus on the bullish reversals. I don't want to waste a lot of time like building out this scanner step by step. I want to quickly get into how you can trade the results of this scanner to help make yourself a better trader. So I've already built it, it's already running, and I'll quickly cover the two conditions. The first, very simple, yesterday's volume is greater than 1 million shares traded. Just don't show me any low volume crap. I use this filter in most of my scanners. The second study filter, being the meat and potatoes, is the equation for how we are finding bullish hammer candles. This is actually relatively hard to figure out conceptually, but I think I found a pretty good way to do it. The first filter that must be true, close must be greater than open. The candle must be currently green. Then the low of the current candle must be less than the opening value of said candle subtracted by half the value of the average true range study. Taking a look at one of the stocks currently being returned by the scanner, TEM, you can see it is currently getting a hammer candle. It also got a hammer candle back here, just for continuity's sake, right before making a 21% move in 4 trading days. So nice example of it working right here next to my head. But why is it getting a hammer candle now? I have actually turned on the average true range study. What this study is doing is it is measuring the average amount that the ticker is moving in points over the last 14 bars. So the current value on this ticker is 5.6. Over the last 14 bars, the average distance that the ticker is moving is 5.6 points. Of course, for our scanner, you multiply that number by 0.5. You cut it in half. 5.6 cut in half is something like 2.8. Actually, I think it is 2.8. So as long as this lower wick is 2.8 points below the open of today's candle, it is a hammer candle. Obviously, the candle has to also be green. The open of this candle is $70.07. The low of this candle is $67.12. That is actually like just about there. I think it's like $2.90 or something like that. Just about there, but obviously enough of a move down to be considered a hammer candle. Go back to the beginning of this video. Remember when I was showing you this example of hammer reversal candles? Well, a handful of them, actually most of them, are red candles, meaning the current price was not greater than the opening price. So this candle, and this candle would not have shown up on your scanner. As long as the stock has that long lower wick, it is a hammer candle. It doesn't really matter if the candle is green or red. So let's update now our scanner to include these type of candles so that you're not missing out on those potential moves. We're about to hop into some relatively complex custom coding. So I just want to let you know first that if you are interested in this scanner, it is available over on my website for easy import into your own ThinkorSwim application, alongside over 150 other custom coded scanners like you're seeing in today's video, studies, even trading strategies. Once again, all over my website, daytradingstrategies.net. linked in the description down below this video. And for right now, I even have a handful of free codes that you can take advantage of. Every single code on the website will come with one of these TOS share links. All you need to do is copy this link. Then within your ThinkorSwim application, go to Setup in the top right, open shared items, paste in that link, preview, and import. Just like that. 3 clicks and 10 seconds, and you can have all of my 150 codes imported into your own ThinkorSwim forever. They are now locally stored within your application, so you have them forever, whether you remain subscribed to my site or not. And since I just imported a study, I simply turn it on like I turn on any other study. Once again, link to the website in the description down below. At least go take advantage of the free codes. I mean, why not? They are completely free, no strings attached. Read the reviews while you're over there. Decide if it's something that can help accelerate your trading journey. So back within our ThinkorSwim scan tab, I now have the new code running, and you can see there are red stocks now being returned in the scanner. Now, I showed you the green stocks only code first for a reason. I wanted you to see the code in its simplest form, so it was the most easy to understand. And that code still exists directly within this one. All I've done is I've wrapped it within an if statement. So if the candle is green, then perform the calculation we talked about. Else, so if the candle isn't green, then perform the same calculation, except basing our half ATR value subtraction off of the opening price of the candle, base it off of the current price of the candle. That's because the candle is currently red, so the wick needs to be down and far away from the current price of the candle rather than the open. So it's not actually really that much more complex. It's just a longer line of code, which makes it look more complex, right? But anyway, looking at the results now, the first red stock I see on the results is KLT. We go load up KLTO. We can indeed see that we have a red stock, but it has a very, very long lower wick. Just because the stock is red, who cares? That long lower wick, once again, is what we talked about and why this is a price action reversal signal. Buyers are stepping in and they are buying the dip on this thing. Now, this scanner has very obvious use cases for swing trading, right? You can run this scanner at the end of the day, see the stocks that have made reversal hammer candles, and add them to a watch list for continuation going into the future days. However, this stock is a great example for a use case that could also be for day trading. So the average true range on this stock from the previous bar, which is the value we use because you want to use a static value when you're building scanners rather than the ever-changing ATR value from today. Anyway, the average true range was 30 cents. So when this thing bounced 30 cents from its low, it would have been, actually, no, wait, I'm sorry. We only take half of the average true range value. So when this thing just bounced 15 cents from its low, it would have appeared on the scanner. The low of the day is $1.30. So as soon as this thing touches $1.45, it's going to appear on this scanner. If we hop into an intraday 5-minute time frame here, we could take a look at when this is, right? It's dipping, 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 dipping. As soon as it bounces up and touches $1.45, which it does on this candle here, it will be on the scanner. And since then, this stock has made nearly a 20% move up intraday. So there are use cases for, once again, both swing trading and day trading with a scanner like this. We're still going to build the shooting star scanner as well, meaning, once again, the bearish reversal version of this setup. That'll be extremely useful whether you are looking to enter short or whether you just want to use that for exit conditions. You can add the code I will show you to a watch list, and if you see any of your stocks you own making that candle, you can use it for an exit. It'll be really useful to have. But first, I just want to take a look through some of the names on our bullish hammer candle just to give you an easier and more clear idea of the visualization, how you use this to trade. The first two stocks on the scanner, we have an ADR, which is an American Depository Receipt, and it's some equity stock. And the next one is also just some equity stock. Just avoid equity and ADR type names in your trading. When you see these pop up on watch lists, I couldn't recommend more than just skipping them. So that's what I'm going to do. So the first real stock I see is VXRT. This is a penny stock making a gap up today, which is indeed getting a nice lower wick. Now, the ADR on this thing from yesterday was only 3.5 cents. That means it really only needs to bounce up about 1.5, like 1.67, whatever it would be, per cents today to appear on this scanner. So if I come into the 5-minute chart and we take a look from lows, the current low or the lowest point was 49 cents. If this thing bounces up to 50 cents, it's on the scanner. And you're going to look at this and say, well, Trey, it didn't really do much. You know, it goes from 50 to 54 cents. Like, who cares, right? 50 to 54 cents, that is a 7.5% move, guys. Are you going to complain about a 7.5% move in 20 minutes? I mean, there are index holders that would love to have that return in 12 months. Using a scanner like this, you just located that move in 20 minutes. Very nice. Next one down, KLTO. We've already looked at that one. Next one down is PCG. Let's hop back out to the daily quickly, and let's go take a look at PCG. Here we go. This is a stock that is actually getting pretty hammered right now, but is indeed starting to get a hammer candle. Now, there's a couple of ways you can think about this, right? You've got a couple of hammer candles here at lows on a big move down. This could be a sign of, hey, maybe it's time to start buying this dip. I'm not telling you to do that. I'm not telling you how you should trade using this information at all. I'm just showing you how you can find this information. I also want you to take note of this hammer candle here before a really nice move up. You get a hammer candle here before a nice move up. You get a hammer candle here before a nice move up. And I want to touch on this. Returning subscribers to my YouTube channel will know I always love to show you guys when these setups fail as well. I don't want anybody ever walking away from one of my videos thinking, I found the holy grail, trade just showed me a 100% win rate strategy that will never lose. I do not want to clickbait you like that. I do not want you to think that there is nothing that will like always work in the stock market, right? Look right here. You get a really nice hammer candle setup after a dip, yay yippee, then the stock gets crushed. You would definitely have gotten stopped out, hopefully quickly using your trade strategies in this trade, but this definitely would have been a losing entrance. So they don't all win. But the purpose is 1, 2, 3 winners to 1 loser. You take that, you'd be happy with that. I'd be happy with that. Hopefully you would be happy with that as well. Now, we're not going to look through any more specific names, but I just want to change my filter here from volume to mark to current price. Look at some of the stocks that are on this list. You have Duolingo, you have Lockheed Martin, you've got McDonald's, you've got JP Morgan, just some. Also, like we just kind of looked at some choppy, like very volatile penny stock type stuff. You also have huge names that appear on the list as well. And that is because, going back to an earlier conversation, we are using this average true range study as the reason for calculating what is a large enough lower wick to appear on this scanner. As I mentioned then, it works for all types of stocks, and I just wanted to showcase that to you today as well. You can go look at even massive stocks like Duolingo getting a couple of hammer candles now on this dip. What was another one? McDonald's. This was the one I was talking about at the intro of the video, getting a hammer candle and is actually pushed up even more, I think, since the intro of this video off of that hammer candle. So just, it will work for any type of stock is the point I'm trying to make. All right, let's hop on over to the other direction. Let's build out this scanner for shooting star bearish reversals now. And here is the source code for the shooting star candle. Since we already had one made to find hammer candles, this was really easy. Basically the same idea. If the candle is green, however, this time we move the high value into what we are subtracting half the ATR from. So if the candle is green, then the closing or the current price of the candle must be less than the high minus half ATR, else the opening price of the candle, if it's red, must be less than the high minus half ATR. If we go ahead and zoom out and close this, we can begin to take a look through some of the examples. Once again, a couple of equity names up top. Let's go down to the first real stock, RGTI. Let me move my big albino head out of the way. We do indeed have a shooting star candle. I explained this very quickly in the intro. Remember, a shooting star candle is simply the opposite of a hammer candle. It has a long top wick, meaning that there was heavy selling pressure into a rip today, signifying a likely reversal either in the following bars, or once again, you could use this for day trading. Let me actually pop back out. What was the ATR on yesterday's bar? $1.12. So that is that like 56 cents? If I'm doing my math correct, the stock needs to be down from highs. The current high of the day is $13.56. Let's call it just under $13. This stock needed to get back down below before it appeared on the scanner. That happens here, and you get a pretty immediate 7.5% move down. Once again, the scanner can be used for swing trading. Once again, you run it at the end of the day, you run it after close, build yourself your watch list going into tomorrow, or it can be used for day trading in the same way that the hammer candle scanner can be. Now check this out. I just built this custom column here that highlights green if the current stock has a hammer candle. I ran this against my hammer candle scanner, so of course, just about every single stock is highlighted green. All I have plugged in for the value of this column is the change from yesterday's close. That's not really all that important. You just need some sort of value to throw in. What is important, once again, is the background color will be green if either of our handle conditions are met. Now also check this out. I also created another custom column. I'm not sure why there's two of them. Is this the right one? This one looks like the right one. I created another custom column for shooting star candles. This will highlight red if any stock is meeting our shooting star. Remember, long top wick equations. Guess what? There will be often times where stocks are both. It can be very useful. It will be very useful to you to run both of these scanners at the same time, even while running your hammer and or shooting star scanner. Because it might be a good idea to ignore one, like NUVB is showing up on both. I already actually have it loaded because I was testing. But this, of course, look, it has a long top wick and it has a long bottom wick. So this stock is going to appear on both scanners. And now that you can visually see that, hey, this stock is going to appear on both scanners, it's probably best to ignore it for both setups because it's not really a good hammer or a good shooting star. It's just a really volatile stock that has wicks on both sides. So using these custom columns helps you decide what to ignore, correct? Also, now since you have these custom columns, you can run them on any scanner. Right now, I am running my scanner that returns stocks with over 90% buying volume on the day. There's a lot of buying pressure happening in these names. So of course, I really only expect to see hammer candles and no shooting stars. And that is indeed what we see. But I can now look at this to see which of these heavy buying volume stocks are also forming hammer candles. The first one is OST. Once again, I've already checked it out for testing purposes, but obviously you are getting a really nice hammer candle on this name as well. Can we also just talk about this name? And I've not heard this stock mentioned once. And over the last 2 months, it is up over 420%. I love scanners because there's stocks like this all over the market, just literally that no one is talking about, that are flying. And when you're using custom scanners like this one that I've built and this custom column, you can find them yourself, right? Obviously, this scanner, this buying pressure scanner, is also available over on my website. That is linked in the description down below. Anyway, I also have a similar scanner, but for 90% sell volume. On this one, I expect to see a lot of shooting stars and no hammer candles. Let's give this one a second to load in. My ThinkorSwim is being slow. I've had it open for a while making this video. Hurry up. Okay, it took a second, but it loaded. And as predicted, I see 0 green backgrounds in my hammer column, but a handful of red backgrounds in my shooting star column. The first being NVTS. This should be a stock being heavily sold, which it is. That also contains a very nice top wick. We can be looking for downside continuation on this thing in the coming days. Or, once again, if you wanted to come in and now day trade this thing to the downside, I'm sure it would have been on the shooting star watch list a while ago. This thing has made a pretty big move down. I'm sure, you know what, let's just do the quick check just so you once again get an idea of how it works. The ATR from yesterday was 85 cents. That means it needs to be down 42.5 cents from highs. The high is $9.17. This is really testing my math. So what, like $8.70 or something this thing needs to be trading at to be on the scanner. It's trading there like pretty immediately after open. It begins to fade and it's come down 10% since. So there you go, an example of how you can use this scanner and this column for both day trading and for swing trading. Both of those scans were pretty obvious. One was looking for buy pressure, one was looking for sell pressure. So it was obvious when there was going to be hammers and when there was going to be shooting stars. Now we are looking at simply my low float volatility scanner. It is scanning for cheap stocks that have a very small float or total number of shares outstanding as represented in ThinkorSwim and trading heavy volume. So all of these stocks are going to be volatile. Once again, this scanner is available over on my website. Anyway, what we want to be looking at here now is, of course, if we're looking for bullish reversals, we want to be finding stocks that have a green hammer column and also not a red shooting star column, right? We only want one of the setups to be true. The first stock I see that appearing true on is ADIL. We can go load in ADIL. This is a volatile, this is like a crappy penny stock, but it is volatile. I mean, it's made a move from 57 cents all the way down to 38 cents today. That is a lot of volatility, and it's got a bottoming wick. You can take a look at that for potential bounce or, once again, intraday trading. Let me see if I can find a better example that's not a penny stock. Where's my mark? $2.37 is okay. Let me actually sort top down by mark. Here, SAFX, $7.30. SAFX. Was that right? SAFX. Oh, no, that is incorrect. MIND is the stock that had the bullish candle. MIND, once again, here we go, a volatile stock currently getting a hammer candle after this dip. Once again, obviously, go the other way for shooting star candles. XTIA is a stock that only has a red column, and here is a very volatile name. It's, once again, nice just to run this scanner to be able to find this volatility. Every stock we've looked at so far would have been great for day trading volatility, and now you can use the custom columns to find whether they are currently bullish or currently bearish, whether for today for day trading or for intraday multi-day continuation going into tomorrow and the rest of the week. I'm going to give you all a deal on my site just for sticking around. For those of you that make it to the end of the video, I like to sometimes give you a little extra bonus. So if you go to sign up, once again, you can either sign up for a monthly or an annual plan. I do have my website set up as a subscription service, as I am always, every single week, adding and updating multiple new codes on the website. I want you to evolve with me. That's kind of the purpose of my site, right? So either for monthly or for annual, whichever one you decide to sign up for. Obviously, with the annual plan, you're going to save a bit of money, and you're also going to get lifetime access to a Discord server full of like-minded traders, full of other traders that are using custom ThinkorSwim code. It's just a great place to talk about what you're trading today, what you find to be working best in your own coding, etc. You can go ahead and use coupon on either the monthly or the annual. Use coupon SAVE20, and it's going to take 20% off your first payment if it'll load in. Coupon applied successfully. My computer is really slow right now. I'm doing a thing. Yeah. So it's your first year, only $319 now, by the way. That's a large saving. That's $80 saved, and you're going to get access to all the codes I add. Once again, multiple new codes a week for 12 months. Pretty nuts. Go check that out. By the way, it also works on the course. I have a course for how to code in ThinkorSwim. It will teach you how to code your own custom strategy scanners, studies, etc., just like we've done in today's video. Yes, it is much more expensive, but it's a course. It is information that you'll take with you for the rest of your life, right? You won't need to use my codes anymore once you pay for this. Save 20 also works there. It's going to save you $400. So for the nearly 2,000 of you that are already signed up, I believe at last check we were 6 members away from hitting 2,000 total signups. That's nuts. I never expected the site to grow that big. Or for those of you that will sign up using that Save 20 deal, I hope you take advantage of everything we built in today's video. We built a scanner for both hammer reversal candles and shooting star candles, as well as custom columns for each that you can run against any scanner to be able to find these kind of reversal trading setups. I hope it helps you become a better trader. If it does, if you enjoyed today's video, if you learned anything, take the half second to hit the like button for me. If you would like to continue learning, make sure you subscribe to the YouTube channel down below. It's completely free. Why not do it? Also, YouTube algorithm thinks you will enjoy this video right here, and the algorithm's pretty smart, so why not go check it out next?